All right, let's get this started. First, we're going to check the fundamentals, go to Forex Factory. I was actually just talking to James, and he was talking about the manufacturing index. What the fuck? So apparently this is the worst reading that they've had outside of COVID. So that's a crazy number right there. Let's see what the market did. What was that, 830? Go to S&P, 830. That's pretty crazy. What times are it now? It's 10:30, so it was 2 hours ago. Must have been that spike down there. It actually doesn't look like it moved the market much at all. So mark up some of the highs and lows over here. Some pretty tight consolidation right now. It looks like it's losing momentum. It's all-time highs, right? This low got ran and then pushed back up, but it looks like it's not. It just doesn't have any momentum to sustain movement to the upside. Doing absolutely fucking fantastic right now. All right, I guess we're starting here. Yeah, the market looks like it's losing momentum. Like all the momentum it had to the upside. Just at a quick glance. Run through the time frames real quick. A weekly high here. Weekly low here. Have this old weekly high here. You expect to see a bounce here at some point if it touches it. Which, I mean, it's looking like it's going to touch it. Yeah, it ran this high and it didn't really give much forward momentum past that. Drop down to the 3-day. I can't do that. Drop down to the daily. Yeah, this looks like consolidation at the top, which is typically a sign of a loss of momentum, which means that the market generally comes back down and tests lower prices before making a move back up, if that's what it wants to do. These are the old all-time highs. This technically makes this the new all-time high. Yeah, so this is an interesting area because if it breaks this in either direction, it's probably going to rip unless it just takes out the highs here one last time for a liquidity grab and then runs down. But yeah, this demand zone held. But if it gets ran, it's probably going to run down here. Yeah, this is a little bit of no man's land here. You got the 200 MA as well. Yeah, it looks like you're going to wait for it to break this demand zone, come down, and then come back up, retest supply up here, and then it'll probably come down. If I had to guess. Let's see if this brush is set up correctly. Let's see, probably come down, sweep these lows, pump back up into this area, and then enter a sell somewhere up here. It's the hourly. Yeah, I wouldn't be trading this time right now. Actually, that's not true. I usually wait until like 11:15. You have that window to trade, and then bankers and stuff are all out to lunch. You know, they're not really on the terminals, so you don't want to mess around during that time. You just get chopped up by the computers. Maybe this afternoon, London close, New York close, you see some type of movement, but I don't expect to see anything within the next hour, to be honest. It swept this and pushed up here a little bit. How do I delete this? There we go. Make that a little bit neater. How the fuck do I adjust this tool? I don't really use the brush much. Or ever. Because I don't really stream up until this point. Whatever that's gonna have to do for now. Mess with it another time. Yeah, so this looks like the play, to be honest. It came into this demand zone right here. It's making a push up. Wouldn't be surprised to see it sweep some of this. Come up, come back down, sweep these lows, come back up into this area. This is when you're gonna look for a big play somewhere over here, and then you probably hold those sells down. To here. Just expect to see a bounce there. Maybe it runs those lows, but invalidation at the new highs. Target this low down here. It's not a bad play. All right, that's just a quick glance at the market though. Let's see, what time is it? We got 20 minutes. Let's take a look at the fundamentals. All right, dollars up on the day. Yields are up, bonds are down. Dow Jones is slightly down. NASDAQ slightly up. S&P is at break even. Gold is slightly down. What other news was there today? Where's the filter on this thing? CPI was normal on CAD. Let's see if there's any news. Yeah, factor activity shrinks most since 2020. Shipments and unfilled orders. I just saw that there are chats in here. What strategy am I using? So I use just basic supply and demand, liquidity, price levels. So I got charted here, right? You track the highs and the lows. You're gonna have liquidity at those points, and then you look for areas of demand or supply, just areas of high impact, where you'd expect to see the market react. And it's really just, you look for those areas and then you base it on your bias, and you develop a bias based on the fundamentals, and then trade's just a hypothesis, you know? So you just look the most likely outcome. So let's say requested song without copyright. Thoughts on gold? Yeah, I'll take a look at gold. All right. I usually start at the daily. It's the most. If you could only look at one chart, you should look at the daily chart because it's like it's the in between short term and long term. You know, it's long enough time frame that the institutions, bankers, big traders are all going to be looking at that, and it's short enough time frame that you can develop a bias for the short term on it. So let's start here. Got a daily high up here. So what I do is I mark all the highs and lows that stick out to me when I go to a time frame, because you'd expect when price revisits those areas for it to react one way or another, right? And even if it doesn't react the way that you want, you kind of gather information from that, right? Because if it sweeps this high and then it doesn't continue higher, figure it's losing momentum and it's getting ready for a move downward. Got a daily high there. Got a daily low here. So I just set up my templates so that when I see them, I could just go in here into TradingView and just set it, and then you just copy them, and it kind of makes the process super easy. You got some lows, you got high there. Let's go to the weekly. Yeah, so that high is actually going to be a weekly. So the higher time frame always takes higher precedence over the lower, you know. So that was originally, I had it as a daily. Now it's going to be a weekly. Let's look at the monthlies now. You see this monthly level is kind of where we're stuck at right now, which makes sense because it was obviously a high point of impact. Price reacted strongly there, rejected once, rejected there again, rejected a third time, came down, finally broke, and now it's kind of consolidating here as the market tries to determine where fair value is. And it's kind of determined that this spot, which originally was a spot for rejection, is now becoming fair value. So we'll see if that holds. But I believe that this is gold's at all-time highs, right? Yeah, it is. It's crazy to see all these hugely impactful markets at all-time highs right now. It's a very unnormal thing to see, you know. Template. Let's put it's a monthly low. So you revisit an area like this, right? Which obviously may not be revisited for quite some time, but when you mark up high points of impact like this, it gives you a insight into the market aside from just looking at the noise, you know. So really, when you dive down to this huge time frame right here, this is all one area. Came up, came down, came up, came down. So the market has determined that this was the range for quite a while. And let's see if it looks like it's going to respect that, right? It looks like it's probably going to come down and test some of these areas again. Because it didn't really break out from the high. I got the monthly there. Weekly here. All the weekly inflection points are kind of the same as the monthly, so you don't got to worry about that. Go down to the daily. There's a daily high up here. Could also call this an impulse point. I don't know if anyone trades off impulses or order blocks, things like of that nature, but generally it's considered when you have an opposing candle and then 3 consecutive candles in the other direction, that's considered an impulse, right? So you had this move down, right? So it spent one day, it was down a little bit, it caught some people off sides, and then the market decided it was going to run it up. So boom, 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 ran it up, stopped out anyone that was short, anyone that was long probably took profit. And then you have that over there. So this one didn't really clear out the high. It's not really a true impulse. But yeah, so gold. Drop down to the lower time frame. Same thing here, right? You had an attempted impulse and it didn't really clear out the high, which is never a good sign for longs. H4. But this was an area that came down and respected a little bit. So this is, you consider this demand at this point, right? But not strong demand because it didn't create new highs. So it's an area where you're going to look for failure and look for it to break down below these lows, and then at that point you kind of get a little bit of confirmation that it's going to move lower, right? Because you come down, you want to see buyers come in here if you're long, right? You want to see them step in. This is a good area, and then push price up to new highs. If you're long, that's what you want to see. But it kind of looks like they already attempted that. Was this the previous? Right, so it came up, right, cleared these highs, came down, buyers came in, pushed up, tried to come up to new highs, didn't last, came back down to the previous area of support and demand, which is this whole area over here. So you would have wanted to see it, especially this, it cleared out this low over here, right? Cleared it out, created some liquidity, and attempted to move up. It wasn't able to clear this high. So you want to see it try and do that again if you want to be long. I wouldn't try and be long here. I mean, you're at all-time highs. The market is kind of at a point where no one really knows what's going on. I think gold is a riskier asset than people give it credit for. You know, it really, like, it made all-time highs when indices made all-time highs. You know, like, if people are afraid of the markets, their first move isn't to gold, it's to cash. So I think you look for it to fail here, which it's looking like it did, right? You want to see it come back down into this area, sweep the lows, come down, and then come back up, and then you look for shorts here, and then look for it to come down, probably clear this low down here. So if I was going to trade gold, that's what I'd be looking for. Wait a little longer, but ultimately I think you're looking for it to come back down to this area. If it fails to break out here. Oh, that cam's dark. I gotta figure out how to get that to stay on. It should probably be up. Don't think gold will go down because Fed lowering interest rate, Middle East war, election. Yeah, the Fed they haven't lowered interest rates though. So I actually haven't stayed on top of that. They've just been not doing anything with it, right? Fed interest rate. This is the last FOMC. Yeah, that's right. I got that ASMR voice, baby. You want to get those profits in, Hans? Yeah, so they're just maintaining rates right now, which I think they'll probably do for a while because it's been working. They've kind of gotten the inflation to dip while markets haven't crashed. So I don't think they're going to let markets crash going into an election year. They definitely don't want it to happen. So I just think I just think we get a lot of them just maintaining the interest rate unless something crazy happens for the foreseeable future, you know, at least for the next 3-4 months, the first quarter. We got to make a clip. I gotta get Nate to clip that out, you know. But yeah, I mean, interest rates are obviously the number one factor in every market. So I think if they start lowering interest rates, traditionally you see the market tank after they lower interest rates, and I think gold will definitely get some strength there. But I don't think we're at that point yet. Especially if you want to see gold make huge moves up, you want it to come down and sweep out some of this liquidity. Just get the fucking thing. Get the orders it needs to really make a huge move up, you know. So I think if you're a long-term gold buyer, you want to see it come down. Right. You made this all-time high, and it's kind of been stuck in this range between here and here. So you definitely wasn't able to break this. So you probably want to see it come down, sweep the lows, grab liquidity here, maybe even sweep down here. Like I had that set up. And then there's going to be a ton of stops here. And then blow those stops before it makes new highs. Which could happen if Feds raise interest rates, you know, lower them rather. They said they were going to lower interest rates specifically. 5 cuts in 2024, according to Goldman Sachs. Yeah, mid-year, I think is possible. You know, like I said, the first quarter, I don't think they do anything. So what do we got? We got until probably March. Yeah, probably March, April. Maybe they'll do the first cut, and then gold will definitely rip when they do that. Same with the markets. Well, the market's already crazy high right now. This is a beautiful thing to see if you're a stock guy. Yeah, I think this might be a premature short, to be honest. I think it probably clears out the all-time high. Especially it's hit that point twice, it looks like, you know. You definitely got a bunch of orders sitting above here. You got orders sitting above here. My mind always goes to where the liquidity is at, you know. It's like where the hoe's at, only it's liquidity. So you gotta, if the market's gonna make moves, it's gonna gun for liquidity. And there's definitely liquidity at the all-time highs right now. It probably runs and has people euphoric, you know. You get some stocks that go crazy. Crypto probably makes another thing. You get one more push up before it comes down. Because historically, the market has dropped after Feds start lowering rates, which seems kind of counterintuitive, but it's not necessarily. Because people that have made gains, they want to lock those in and they want to see what's going to happen. So probably run up highs, come down low, and then they really start cutting rates, and then we get another crazy bull run up. Towards the end of 2024, if I had to guess. I don't know. I haven't been dialed in to the fundamentals the way I was towards the middle of last year, to be honest. Is this guy a new hire? OG, baby. Hans is always coming in to support. What do you think, Hans? Interest rates, what are they doing? Let's look at the 10-year. Oh man. I know a lot of Forex people don't look at bonds and yields, but if anyone wants to make this like your long-term thing beyond just like day trading and making videos on Instagram, you're going to want to learn about bonds. 10-year is probably the most important traded thing in traditional finance. So if you want to touch up on fundamentals, things like that, definitely look into bonds, yields, how they correlate with the dollar, interest rates, things of that nature. Yeah, my Instagram is just kind of writing this thing. Yeah, so Hans was joking around, but I run operations for Fortunes. I've been around since before Fortunes Funding was a thing. I helped James build Fortunes of Freedom. I also dabble in trading. I took Q's course back in the day, but really I've been just swamped with so much work outside of trading. I haven't been able to focus on it. So kind of dusting the cobwebs off to make sure that we get some of the live sessions. We got some content for you guys. So yeah, everyone's kind of, it's also the beginning of the year, you know. I feel like historically the beginning of the year there hasn't been a lot of market movement. You got to think a lot of bankers are still on holiday. They're trying to get a sense of the year and setting up plans, stuff like that. I always think of things in the headspace of like the institutions, right? Like, what are they going to do? If I was JP Morgan, if I was BlackRock, right? Like, what is my vision for the market? And then I kind of base everything off of that, right? So if I'm them, I'm going to pull up this weekly chart, right? And I'm going to be like, all right, we're at all-time highs. We obviously want this thing to go higher, but we don't want it to just go straight up. So probably let it consolidate here, this area, pull orders on either side, sweep the high. Yeah, that's what I'm doing, right? I'll let it consolidate, pull up more orders, sweep the low, get in a ton of buyers, sweep the high, have people euphoric, come down, stop out a bunch of those people that are overzealous, that don't have the time frame capacity that I do, stuff like that. Boom, hit this old high here, bounce the market up into new highs. So if I was Larry Fink at BlackRock, that's what I'm doing. But yeah, obviously everything is also based. It's not just on them. It's on the guys at the Fed too. So it's all going to be based on the Fed. Like I said, I think that what they've been doing with interest rates has worked, right? They brought down inflation to some degree, or at least they have numbers that say they brought down inflation. I don't know about you guys, but when I go to the grocery store, that shit is still sky high. But it's not rampant the way it was. They've got it manageable to some degree. So they've been able to taper inflation a little bit without even hurting the market. If we're being honest, we're at all-time highs. So I think they probably want to bring the market down too a little bit, though. That's the only thing. Housing market is still unbelievable. That bubble's got to taper in a little bit, or maybe it doesn't. You know, we've just been flying for so long. Maybe this is just the new economy. It's just you better work somewhere that's going to pay you more and more every year. And you better invest your money intelligently, and you better just run it up because the market's just going to keep tearing. You're welcome, bro. Thanks for appreciating that I'm here. I don't know. I have a cam link and it's plugged into the thing. I don't know how to get it to not turn off. It's probably in the camera settings. I got to go through after this stream and start doing that. Maybe if I hit recording, that'll work. Larry Fink is your uncle. Can you lend us all some money then, my friend? Larry Fink's got to be one of the wealthiest guys on the planet. Yeah. So, what else? Anything else you guys want to see? Talk about? Look at? Oh, look at that, guys. We got the inside scoop. This guy's got all that insider knowledge, you know. This is Nancy Pelosi's husband over here. Just letting us in on all the deets. We appreciate that, my friend. Audi USD, Euro USD. All right. Let's start with Euro USD. Obviously the major pair. If we're going to look at that, I'll look at the dollar first. This actually, yeah, I mean, these lines are still valid. I don't need to clear this chart yet. All right, so we broke down below this old monthly low that I had marked up before I even stopped trading months ago. So it looks like it came down, consolidated. Market kept testing this area as you'd expect. It tried to push up and then didn't, and it came down. So you got these lows here. It swept this first low and then it's kind of respected it. God damn, why is that camera doing that, bro? That's so annoying. So it swept this low, came up, swept this high, hit it. So we're really in this consolidation still right now. This would have been, if you were looking for longs, this is where you would have looked for a long, right? Because it swept the low, it didn't go lower. And then it had this impulse up, which made a new high. So you actually drop down to a lower time frame. Oh, fuck. This should be on that time frame. Visibility, days, all of them. Yeah. So if you look down to this area of demand, you can kind of tighten it a little bit now that we're down on this daily time frame, right? This would have been if you'd gotten to this point, this would have been where you probably could have shot for a long entry on USD, right? You have this old low, template, daily low, came up, swept the highs, came down, almost swept the lows and went back into that demand zone. Very close. Yeah, if I was gonna long the dollar, I'd want to see it hit that demand zone. So the reason I obviously went to this because Euro USD, you're gonna base Euro USD on what you think the market is gonna do. So Euro's been strong because the dollar's been down, which we just saw it was down, and then it bounced a little bit, which is why now Euro USD is dropping a little bit. Let's mark up these daily levels. A daily low. Got a daily high. So this is the daily range right now. You can look at this and you can look at this as a potential area of demand, right? Because it came down into this old demand area. It did exactly what it was supposed to. Shit. Right, so you had this. area right here. It came up, swept this high, swept this old high. Boom, dropped back down into this area of demand. The market stepped in, decided that this was an area of demand. Boom, came up, swept this old high, swept this old high. Boom, came down. So now you want to see as a continuation, right? You want to see it come back down, drop into this area of demand right here, potentially sweep these lows even, and then go up and make new highs, and then sweep another high, potentially even this big one up here. But definitely at least that. Although sometimes I'm always weary when you see two areas like this, right? Like a high and a high, or a low and a low back to back without touching, because sometimes the market will have just used that to trap a lot of people who are waiting for that sweep and then drop it down. But if that would actually be a perfect way to drop it down and sweep these lows here, right? So see this right now, come down, hit this area of demand, possibly sweep the lows, come up, hit, make new highs, maybe make new highs here, and then probably come back down to earth and then do the same thing. Really, all you're trying to do is figure out what pattern the market is doing, and you want to see it continue that pattern, right? So like we just said with that old one, it swept up, came down into the demand, swept up. You want to see it come back down into the demand, sweep up. You want to see it come back down into a different demand, sweep up. And you want to just take those plays for as long as the market is giving them to you and it makes sense for the fundamentals. Right. That's really all it does, right? Boom, down, up, down, up, down, up, down, until it hits a point where it reverses. And then at first it's going to make a huge move down. It's going to catch a lot of people off sides, but then it's going to retrace and it's going to do the same thing, up and down, up and down. Because at the end of the day, that's the market's goal, is to test every single level and decide what fair value is. Our job as traders is just to figure out where fair value should be, and if price is not at that level, then we take a trade. That's it. CPI and XAU have inverse correlation. All right. So CPI and XAU have an inverse correlation because CPI is just, at its core, CPI is inflation. And the higher inflation is, the worse holding the dollar is, right? Because inflation just determines that a single dollar is not worth as much. So if a single dollar is not worth as much, a single block of gold is worth more USD. For better, that's a little bit of an oversimplification, but for trading purposes, that's enough to understand. So if CPI is high, the dollar is going to come down, right? Because CPI is going to be up here, and then people are going to be like, oh my God, CPI is high, so they're going to sell dollars because they're not worth as much, and they're going to convert them into assets that are like gold. So then as the dollar comes down, gold is going to go up, right? Because CPI is high, dollar is going to drop, and gold should go up theoretically, because people consider gold to be a store of value, which it's been a little tricky because it hasn't really done that. Gold is really traded in a way that is conducive to people that trade gold and no one else, if I'm being honest. Like, it's just, sometimes it acts as a store of value, sometimes it doesn't. So gold is tricky. Gold is actually something I don't personally trade, because the fundamentals of it just don't make sense in my brain. Whereas the market makes a lot of sense in my brain, right? The indices, the dollar, even the pairs, it makes perfect sense. And gold, it just, to me, it doesn't. Fed going to cut rate in March? Definitely could. What are interest rates right now? Let's take a look. What's today, the 16th? Let's take a look at the past. take a look at everything over the past month, right? So what do we got? CPI. I really only care about the dollar, to be honest. Meeting minutes. I didn't even look at what happened with the meeting minutes. All right, let's look at the last CPI. What was that? It was actually up. That's not good. What day was that? January 11th. What happened on January 11th? Gold didn't do much. Did the dollar do much? Dollar didn't do much either. It looks like the market kind of shrugged that off. All right, do Audi and then the JPYs. But yeah, so Euro USD. We just covered a little bit, right? I'd expect for it to come down in this area and then come back up if it follows. But in the short term, I'd be looking for. I mean, I wouldn't do anything, to be honest. This is not really an area where you enter unless you're scalping. All right, out of USD. Let's go back to the daily time frame. It's been on a downtrend the past couple of days. Looks like it's gunning for this low. So this has kind of done the opposite of what we were just watching in euros at USD, right? Nah, not necessarily. It kind of did the same thing where it made that double, those two double highs right there. This I would expect to run this low, just because this area, even though it technically impulsed up, it just didn't have, prior to that, it didn't have much going on, you know? If you just look at that. That's just a giant wick with no body. So I definitely expect this to sweep down here, because it just doesn't seem like there's a lot of meat there to stop it from doing that. This low. I'd like to see, you have, look at this area. Look how much this one area has been tested. So I'd like to see, yeah, daily low, or daily high rather. So this is an old high, right? And then it broke that high, came down, touched it, bounced up. So I'd expect it to do that again. And then if it fails, I think you start looking for sells, right? Come back up, start looking for sells. But if it holds and it sweeps this low, you see new highs. So it kind of looks like we're in an uptrend. So that's kind of what it looks like it's gonna do. Same thing as Euro USD, to be honest, which makes sense because if the dollar's gonna be weaker, these currencies are gonna be stronger against it. But it looks like it's gonna come, it's gonna sweep that low. This one probably holds. And then it comes up and make new highs. JPYs. The EMA. It's just simple. I just use, so I actually normally have both. I just use the 200 and the 50. But right now it's just the 200. But yeah, I just use the 200 and the 50 because it's just, you can't really trade off indicators. I know some people do. Some people are really fucking good at it, to be honest. But for me, it's just more of a form of confluence, right? If you see the MAs doing what you want them to be doing, like the 200 is usually supposed to hold. It's supposed to be a very strong, valid point, right? You'll see it came up, boom, boom. And then when it didn't, you kind of had a clue that it wasn't going to again, right? Although this just kind of double topped out, which is another reason you'd expect to see this break and clear these highs, because there's got to be a ton of liquidity sitting up here. Yeah, I would expect this to come up, run this liquidity, run this high, run those, and then trigger all those limits or stops that are there, and then probably catch some people off base that are going to be expecting it to go higher. So I feel like this would be an area, right? You get these people that are in shorts, you get their stops, and then you get people that want highs, right? And you get them and you catch them off base, and that's a lot of movement to come back down. So I think that's probably what'll happen is it'll hit this area up here, and then it'll drop pretty strongly probably. We can do the JPYs, right? But yeah, the EMA is just just a 200 EMA. All the regular settings. I don't get fancy with it. UJ, we'll start with UJ. This is on the up and up. This looks like it's going to come up here. I mean, just a quick glance just looks like it's going to at least clear out those highs, right? Because you kind of entered the exact area that you would want to see it turn around, and it did, right? At this old area of demand. Boom. Came down right into here. Swept this old low for that liquidity, but these lows held. Yeah, I would not be surprised if this just slowly trucked its way back up. What's this old high? Yeah, especially you have double liquidity points up there. I would expect them to clear that out if it's going to make a major move down. GJ. Do I even have JJ on here? No. It doesn't really matter. These, okay. Same type of situation with this, it looks like. Daily high. Got a daily low. Got 3 lows right there. Yeah, this looks strong to the upside. I would expect it to sweep this. Let's zoom out and see what it's probably going to gun for. Got our weekly here. Got our weekly here. You have this old impost down. You expect this to act as resistance. Yeah, so I'd expect it to come at least to this area and retest this resistance. That area of supply. Yeah, definitely expect it to sweep up here. Just come up here, test this, drop back down, and then depending on the fundamentals, either gone up for all-time highs or just this would be an area to enter shorts when it retests and then ride it down a little bit. Yeah, indicators are lagging. Indicators are lagging, which is why they're really hard to use for trading, and not many people can, except the people that specialize in them. And the people that specialize in them can generally do it because they're just so good with the indicators that they can read the market really well in the moment, even though the indicator is lagging. Just because they've seen the same pattern like happen so many times that they know what's going to happen. They don't know what's going to happen, but they have a high degree of probability of being right, that what they think is going to occur is going to occur based on what they see in the indicator. You know, it's more of like a pattern recognition than actually using the indicator. Your mentor is not in Instagram. I think that's probably a good thing. How did you locate your mentor? $10K in prop firm every week. Oh, man. All right, guys. I got last couple of minutes here before I got to hop off. Anyone got any questions? You're welcome, bro. I'm just analyzing the market and taking a look at what it looks like. Like I said, I don't trade past 11:15 New York session, just because it's the likelihood of things not going the way you want, or it's just very, very high. Things go the way you expect when the players that move the market are in, right? So the banks, the institutions, things like that, they're the ones that move the market, and that's why it moves in the way you kind of expect. When they're not in, you have all these algorithms that are just constantly buying and selling just to keep the market running, that it's likely that the market's going to do some weird stuff that's going to invalidate your setup. You're welcome, bro. Thanks for the words. You know, I honestly thought I'd be alone on this first stream. Funding pips. How is funding pips? I know a lot of people have been using them. One of my boys said he was going to try them out, so I'm curious. Yeah, like I kind of alluded to earlier, a lot of the bankers and stuff are going to ease their way back into the market, because you got to figure a lot of these guys are making $300,000-$400,000 a year, and then they take off as much as they want around the holidays. So a lot of them are just kind of chilling, moseying back in. So also everyone's kind of waiting to see what's going to happen. There's a lot of uncertainty, and the markets do not like uncertainty. Yeah. Today's Tuesday. We'll see what's up next Tuesday. Hopefully by next Tuesday I'll have some. I'll have an account set up that I can hop on. I tried to set one up. I just couldn't get it up in time. So hopefully that'll be up. I'll be on next Tuesday for New York Open. Hey, Jaquan. My main thing is I trade the indices. So I trade US 30 and I trade NASDAQ. I think I'm going to do a running up a small account challenge. I think I'm going to cater this to like people that are really just getting started, or not even just getting started, but like struggling, don't have a lot of money to to start building up their accounts and stuff like that, you know. So I'm gonna try and put like $100 into an account and just try and just get a little bigger, you know. Yeah, see you next Tuesday. See you next Tuesday. All right, fellas, 11:30. Take it easy. Everyone be good. I don't know that yet. I'll have that answer next week, honestly. James, I was talking to James actually right before I hopped on stream. So I know he's got a new broker that he's using. I'm gonna look into them and see how I like them, and then I'll take it from there. I would obviously I would use Fortunes if I could, but because I'm an actual full employee and I'm heavily integrated into the operations, things like that, I'm not allowed to trade on the platform. It's a conflict of interest, and I'm not going to rep any other prop firm because, you know, we got the best one, so it wouldn't make any sense. But definitely cook something up, keep things interesting. What's up, Izzo? Yeah, for guys that are just tuning in, I'm gonna be doing these streams on Tuesdays, potentially other days of the week. If so, I'll post it. This was really just an introductory one. I wanted to make sure everything was getting started. As you can see, I'm having a ton of problems with my camera and stuff like that. I wasn't able to get an account set up, but I'm glad that we got to get something in the books to build on for next week and the upcoming streams. But yeah, it's going to be probably from 8:30 to 11:30. I don't trade past 11:15 just because the bankers and stuff are all out to lunch and the algorithms take over, and it's really easy to get chopped up and for the market to do weird stuff. So I don't think it's a good time to trade. And I personally, once it hits 11:15, I just walk away. Otherwise, I know my win rate at that point is just down in the floor. Yeah, of course. XNES is the best broker. All right, I'll take a look at them. Yeah, I know. I was using Air just because that was the one that, you know, James was using. It was working for me fine, but I know that they got bumped off of MetaTrader. So I was taking a look at a few alternatives, and I'll have something figured out by next week. But yeah, so I'll talk to you guys next week, or maybe I'll put together another stream if things kind of work out that way. If so, I'll post it on the socials. Feel free to hit me up on Instagram, or you could hit up Fortune Support at any time if you guys need anything. But otherwise, take it easy. Best of luck trading.